So hello students, let us today discuss about a problem on depreciation accounting using straight line method. So we are going to look over to a problem in full detail problem so that we can understand that how ledger is passed or how journal entry is prepared in case of depreciation accounting under straight line method. So today I have taken a problem, and in that particular problem we will try to solve a working note on the depreciation accounting. We will prepare the journal entries and we will also pass the ledgers. We will go for the preparation of ledger account. So the problem is of something like this. So what the problem says, if you see the problem, here it is given a firm purchased a plant for rupees a sum of rupees 10,000. So here the value of this plant is rupees 10,000. So it's a plant basically here means factory on 1st of January 2017. Now the installation charges are rupees 2000. So there is an installation cost, that means the cost which is incurred by the factory or by the firm to install that particular plant. Now the plant is estimated to have a scrap value of rupees 1000 at the end of its useful life of 5 years. So it will have a scrap value. Now scrap value is given how much? Rupees 1000, and that too again its useful life is given 5 years. So that means it is having a useful life of 5 years. So we are required to prepare, or you are required to prepare, the plant account and depreciation account. So we were asked to prepare two basic accounts. One is plant account and other one is depreciation account for the first 3 years. So we have to only prepare the account for the 3 years part. So what we will prepare? We will prepare the plant account and we will also prepare the depreciation account. These two accounts we are going to prepare, and we will only prepare it for the 3 years time period. So that is the time period for which we are supposed to prepare this account, and we have to charge depreciation as per straight line method. So we are following straight line method for preparation of accounts. So all the accounts are closed on which date? It is closed on 31st of December. So 31st December is always the last date of preparing the accounts. So how we are going to pass the working note, prepare the working note, how we are going to prepare the journal, then we are going to prepare the ledger. So let's look over to that. Now at the very beginning we will try to calculate the amount of depreciation that is to be charged every year on that particular plant. So we will go for a calculation here. So depreciation to be charged every year. So how much depreciation will be charged every year? So the formula of that depreciation is what? Cost of plant, that means the price at which the plant is purchased, minus scrap value, divided by expected life of the plant. So what is the expected life of the plant? So in the question it is given the cost of plant is rupees 10,000 and 2,000 is installation charges. So 2,000 rupees is installation charges. So that is same. So that means the total cost of the plant incurred is 12,000. Moreover, the scrap value is given rupees 1,000 and expected life is given 5 years. So if we put the formula on that, 12,000 minus 12,000 means 10,000 plus 2,000. So 12,000 minus 1,000, 1,000 is a scrap value, divided by 5. We used to get rupees 2,200 every year. So once this information is given to us, we can easily calculate the working note. We can easily go for the working note. So the very initial stage of solving depreciation accounting and the straight line method is that we have to calculate the amount of depreciation that is to be charged every year on the machine or on the asset. So once we got the depreciation account, now let us come to the this one, working note part. Now if we go for the working note part, the cost of plant is, the machine was purchased on 1st of January 2017. So it is 10,000 rupees the value of the machine and 2,000 installation. So cost of plant is 12,000. So on 1st January 2017 the machine was purchased. So after 1 year, that means after a period of 1 year, so if as the life of the machine is given 5 years, so as per the question we have a 5 years time period for the machine. So machine is having a 5 years time. So this is first year, this is second year, this is third year, this is fourth year, this is fifth year. So the machine is purchased on 1st of January 17, and every year the accounts closed on 31st of December as per the question. So obviously in 2017 this is 1 year, this is 2 years, and this is 3 years. So we are going to prepare our ledger for these 3 years. So if we have purchased the machine on this date, that means on 1st of January 2017. So our first depreciation will be charged on 31st of December. So that's why 31st of December 2017, 2200 is the depreciation charged. So once we deduct it, we used to get 9800. From that 9800, again we are now going to charge depreciation in the next year. That means again 31st of December of 2019, 2018. So we are going to charge depreciation for that. So second year depreciation will be again 2200. So now the value left out 7600. Likewise, we will also pass the depreciation entry on 31st of December 2019. That is the third year. That means 2200. So mega pardon, this is a spelling mistake. So it should be 2019. It cannot be this. So because 31st of December 2018 cannot be two figures, so it is 2019. So 2200. So after 3 years, because this is the first year, as per the question we have to prepare for 3 years. So this is the first year, this is second year, and this information is for third year. So obviously after 3 years we have 5400 value of that particular plant. So this is what the working note is and how we are to generally prepare the working note. So once the working note is prepared, we are going for passing it into the journal. So we will pass the journal entries what on 1st January 2017, because the machine is purchased on 1st January. So obviously debit what comes in. So it's a real account formula. So debit what comes in, plant is coming in, so plant account debit, and what is going out, cash is going out. So to real account again. So this both are the real account part. So this includes including the cost of installation. So that is 10,000 plus 2,000. So the machine is purchased on this date. So plant account debit to cash account. On 31st December 2017, we will charge depreciation. So depreciation account debit. Depreciation account debit is a nominal account, right? And to plant account. So this is a real account. So this is real account. Likewise, again on that same day, 31st December 2017, this depreciation, the depreciation which is calculated here, the depreciation which is calculated in the last entry, this depreciation must be transferred to profit and loss account. So what we used to do, profit and loss account debit to depreciation account, we are transferring this particular amount to the profit and loss account. So likewise, we will repeat these journal entries every year for 3 years. So next year journal entry will be on 31st of December 2018. First depreciation account debit to plant account. Then again on that same day, 31st December 2018, profit and loss account debit to depreciation account. So this is a second year. Now on the third year, 31st of December 2019, so we'll pass a journal entry of depreciation account debit to plant account, and next we'll transfer the amount of depreciation to profit and loss account, that is profit and loss account debit to depreciation account. So in this entry, depreciation is debit. When we are transferring, it is automatically get credited. So same thing happens in the second year also. It is automatically gets credited. So once it is get credited, means we are transferring that particular amount of depreciation to the profit and loss account. So once we have prepared the journal entries, now we have to look over how we are going to prepare the ledgers. So I'm just taking a sample of one by one. So our first entry was what? 1st January 2017, plant account debit to cash account. So there will be two ledgers for this. One will be plant, other one is cash. Now as per the question, only we have to prepare plant and depreciation. So we are not going to prepare anything else. So here we are going to prepare the plant account. We are not going to prepare the cash account because question is not asking that. So plant is on which side? Debit side. So obviously plant is debit side, means this will come on the debit side, because the left hand side is always debit and the right hand side is always credit, and the plant is given which side? Debit side. So as the plant is given in the debit side, so what we'll do, we will transfer this entry into the debit side. So two cash accounts. So two cash account, 10,000 and 2,000. So because this particular figure includes both 10,000 as well as 2,000. So these two are totally separate items. So these two are included and this is gone there. So that's why when we'll pass the journal entry in a ledger, we will separate it. So two cash account, this is for the machine, cost of the machine, and two cash account, this is for the installation. So finally, this is installation charges or installation fees or whatever we generally call. So that is there to 12,000. Now from this particular 12,000, what we are going to do, we are going to record this 12,000 in the credit side. So this 12,000 recorded in the credit side also, and from this particular 12,000 we will go for this part. So both the sides should be equal. So if this side is 12,000, then the other side should be also be 12,000. So both the sides should be 12,000. Now let us come to the second journal. The next journal entry was what? On 31st of December 2017, we are passing depreciation account debit to plant account. So depreciation account debit to plant account means we are going to prepare depreciation account and plant account. So we'll prepare depreciation account later on, first plant account. Now plant is given in which side? It is given in the credit side. So we'll record in the credit side. Now credit side, what we will record? By depreciation account. So 2200. So if you look over, this is 12,000 and another side there is a 12,000. So 12,000 minus 2200. So 12,000 minus 2200, you will get the figure of this. So this is the figure of the balance figure of the first year. Now this balance will be transferred to the next year because this is on 31st of December 17. So December is the last date. So automatically the balance will go to the opening date. So how it happens? So if you see there the balance of this figure, that means 9,800 is the balance on 31st of December 2017. Now this is automatically transferred to the next year, that is on 1st of January 2018. Two balance brought down 9,800. So we are transferring that figure to the next year opening balance. That means the closing balance of one year becomes the opening balance of the another year. Now again in the next year on 31st of December 2018, we are going to pass again the journal entry depreciation account debit to plant account. Depreciation will prepare later on. Plant is given on the credit side. So that means it will be recorded in the credit side. So it will be by depreciation on that day. So we are going to take the depreciation of 2200, and after that this 9,800 and 9,800 minus 2,200, it will give us the balance figure. So the balance figure of the plant after 2 years is this much. Next, if you go for the third year, now here you will find the balance is 2,600 and this balance is now again transferred to the next year opening balance. So because the closing is on 31st of December 18. So 31st December 18, if it is closing, then the next day is the opening. So this 7,600 is transferred to the next opening period. Now on 31st December 2019, depreciation account debit to plant and machinery is in the credit side. So that means on the credit side we'll write by depreciation, we'll write the amount of depreciation, and we'll write the balancing figure. So balancing figure is of this much, which is on 31st of December 19. So we are going to keep on passing the journal entries in that way every year. So till we have to prepare. So now here in the question we are asked to prepare for 3 years. So this is the first year, then this comes the second year, and this comes the third year. So as we have to prepare it for 3 years, so these 3 years are prepared together. Now likewise we have to prepare the depreciation account. Now to prepare the depreciation account, I will just repeat the journal entries which we have passed. Depreciation account debit to plant account. So we have already prepared the account of plant. Now depreciation account debit. Depreciation is given in the debit side, so it will be definitely on the debit side. Now debit side, what we'll write? To plant account 2200. And the next entry is what? Profit and loss account debit to depreciation account. Now in this case depreciation is on the credit side, so we will write it the credit side, what? By profit and loss account. So if you look over both the sides are equal. Okay. Similarly, the next year, if we go for the 2018, depreciation account debit to plant account, depreciation is given in the debit side, so depreciation debit side. So this entry is coming in the debit side. To plant account 2200. Next, profit and loss to depreciation account. Depreciation account should be on the credit side. So we have recorded here 2200. So depreciation is on the credit side. We are recording accordingly. Now in the third year also, we will look over the same format, that is 31st December 2019, 31st December 2019, depreciation account debit. Depreciation is on the debit side, right? So depreciation account debit, so it will be on the debit side. To plant account 2200. Next, profit and loss account debit to depreciation account. So depreciation is given on the credit side, so it will be account in the credit side, debit side, profit and loss account. So we will have again a figure of 2200 here. Now once we have prepared it, now let us see the whole format as a whole. So here this is the first year, this is second year, and this is third year. So we have purchased at 10,000, 2,000 installation cost, that means 12,000. Now this 12,000 should be here. Then out of that 12,000, On 31st December 2017, there is a depreciation charged on 2200. So obviously 12,000 minus 2200, that is 9,800. Now this 9,800, it will be transferred to the next year. So this 9,800 is transferred to the next year as a opening balance. Now again in this year there is a depreciation. So we have a depreciation on this year also 2200. After that we will deduct on 31st of December 2018, it will be by balance. So balance is how much? 7,600, and that will be transferred again to the next year 7,600, right? So this balance has comes from the last year. Now this year again we are going to pass the depreciation, and the balance will be on 31st of December 2019. So this is how we are going to prepare the plant account every year, whatever is asked in the question. Now likewise we will have a depreciation account. Depreciation debit side will be what? Always to plant account, and credit side by profit and loss. So it's a kind of a rule. You can just simply remember it, and you can able to prepare depreciation account very easily. So in the debit side to plant account, in the credit side by profit and loss account, right?